What's up, YouTube fam? In this video, we're going to discuss how I almost lost the full $20,000 selling options. So let's get into it. Tonight, we're doing a nighttime episode. Usually I get these videos out for you guys early in the daytime, but today I was just too busy to get a video out. But I'm committed, so I wanted to make sure to get this one out for you guys. So as you can see, we decided to sell some puts on MSTX. Now, I honestly wasn't familiar with this type of ticker until someone in the comments mentioned it. So I want to shout you out, whoever you are. But what it is it's a leveraged version of MicroStrategy, right? So they have this for a lot of the bigger stocks, right? They have it for Nvidia. They have it for Tesla. Now, you do have to be careful because, this stuff does move fast, right? So I was playing around with it. And what happened was right away when I got in, it started dumping. So you see how it says I'm up $1,400 for the day. The reason why it says it is because at one point yesterday we were down. Let's see if we go to weekly. See, at one point yesterday we were down all the way to 20,845. Now don't be mistaken, right? You're not actually down that money, right? Because the way it works is obviously it would have to expire below 75 for us to even have to buy. Otherwise, we're just going to collect the $1,300 in premium, right? So if we look at the simulated returns, right, it tells us what we're going to collect, assuming it stays above 75. Like right now, this is the current price. Now we can play around with this, right? Let's see. Why isn't it letting me drag it right now? Give me 1 second. So like if we were to go like 65, right, and it expired at 65, we would actually lose really only $700, right? Because what you would do is you would take $2,000, right? Why would we be down 2,000? Because it would be down $10 below our strike, right? So we would buy 200 shares at $75 and it's at 65, but then since we're collecting 1,300 in premium, we would only lose 700. So if we were to put $70, right, it expires at 70, we're actually still gaining $286, despite the fact that we would have purchased at 75. Obviously, if it expires at 75, we're getting the full premium and we're break even. Anything above that, it's the same case, right? So right when I got in, as you can see, the stock just completely dumped and went all the way to 75. Now that's the risk about this type of stuff, right? MSTX, it's a 2x leveraged, right, version of MicroStrategy. So that means every move that MicroStrategy makes, it's going to move 2x the speed. So when we look at, this type of play, it was down 23% in just a day, which means MicroStrategy was down 12%, right? And if we go and look, it's the same thing, right? Same chart, but just half of the value. Now, why would you do this? Why would you take on this risk? Obviously, for my account size, MicroStrategy, it would be too expensive to sell premiums, right? At 388, that means you need 38,000. In this case, you would need 10,000, right? So for my account with 22,000, I can sell, 200 shares, at the very least, right? I probably could have been able to sell more if I wasn't already in this play. So, there's a lot of value in it, right? It's the same thing with Nvidia. Right, if we look at Nvidia, $16, right, the NVDX, Tesla, right, and we could look at a lot of growth stocks. They have this type of stuff. Now, you have to be careful with this because, again, obviously it's moving at double the rate. Now, the beautiful part is when you look at where I entered this trade at $100, right, so that means my strike was 75. It was 26% below. Obviously, if you're playing normal stocks, you're not going to be able to collect $1,300 off of 15,000, right? Because, all right, so 75 times 2 is 150, right? You times that, that's 15,000. So you're not going to be able to collect 1,300 in 10 days off of 15,000 unless you're doing stuff like this. Now, obviously, you have to have an appetite for risk, right? For me, right, based on my background of trading all these other crazy instruments, Forex, leverage, zero-date options, I would rather be stuck buying shares on a 2x leverage of an asset I trust than buying meme coins, than buying zero-date options, than buying penny stocks. Because truthfully, I'm a believer in something like MicroStrategy. I'm a believer in Michael Saylor, right? I'm a believer in Nvidia. I'm a believer in Tesla. So obviously these are risks because they're moving at 2x the speed. So yeah, if you lose, you're going to lose at 2x the speed. But at the same time, it's like, would you rather take that risk on something you trust, or would you rather take that risk on, penny stocks or meme coins, right? So, yesterday, like I said, we had, a little bit of a scare. Sorry for I'm a little congested. Usually we do these videos in the morning before I eat. Now it's after dinner, so I'm a little full. But yeah, again, at some points yesterday I was a little scared, but at the same time, what would have been the worst that happens, right? Would this have gone to zero? Like, all right, is there a possibility that the market completely crashes? Absolutely, right? And that's the risk of taking this type of stuff, especially an asset like this where there's barely any chart data, right? But do I see MicroStrategy going to freaking $0 at this rate? Not really, right? It's in a very strong bullish trend. Obviously, it's following Bitcoin, which Bitcoin's also extremely strong right now. Now, is it due for a retracement? Yes. But who's trying to predict that, right? I'm not sitting here trying to predict when Bitcoin's going to retrace, right? So for me, the risk of having to buy at $75, which is 30% lower than where it's currently trading. Now, obviously, it's not as safe as it seems in the sense of it really got there so fast, right? It got to 75 so fast, but it bounced off it very quick as well. So, right now it's Wednesday night. Thursday, tomorrow, Thanksgiving, the market will be closed. I don't know what will happen when we open Friday. But if I'm stuck next week holding these, I'm not going to be so devastated. I'm not going to be so concerned, right? Like, do I think it'll come back down right now? It's a high chance. But again, I'm not here to predict it, right? All I can tell you is if it expires below 75, I'm prepared to own this. Now, I haven't had to, what's the word? I know I've been saying exercise. I haven't been assigned on any of these contracts yet, right? I've been very careful in that regard. It's been, some rough waters. Obviously, yesterday we were talking about Abercrombie and Fitch, and my strike was 147. Now, I was up 50, 60%, and I saw it bouncing around. So I was like, you know what? Why wait for it to come down here and then get assigned? Let me just take my profit, right? And that's what this is all about. This is all about growing the account in a steady way. Now, obviously, taking the play on MSTX could have resulted in some huge losses, and it still could. But at the same time, if we get assigned at 75 and it comes down to even 40 and then rips back up to 100, we're putting ourselves in a position to still be very profitable, right? And that's why we'll always talk about on this channel taking cash secured puts as opposed to covered calls, right? Because if you would have taken covered calls and you bought at 100, you would have had to absorb all of these losses. Now, obviously, assuming you don't get assigned, which you wouldn't have because your covered call strike would be higher, you would have wrote it back up. But who wants to deal with that stress, right? I would rather it dump 30% and now my entry's down here, right? And I'll put the little line just so you can see. And that's the thing I like when it comes to selling cash secured puts, right? I like to always try to get my strike to be below a swing low, right? Just because, statistically speaking, these are the best times to buy, right? The best times to buy are stocks that are clearly in a bull trend and getting in on swing lows, right? So obviously the last couple of days it has been rather bearish, but when you zoom out, right, it's obviously in a very clear bull trend. So it's like 75 is a great buy based on this chart. Ultimately, to try and predict, right, to try and figure out what's the perfect buy, to try to time the market, right? If I had that crystal ball, if I had those powers, I wouldn't be making videos like this, right? I'd be worth hundreds of millions of dollars by now. So, as a normal human being, as a speculator, I'm just trying to do what seems like the right play, right? Now, again, I'm not perfect. I'm not saying I'm this genius. I'm just trying to maneuver around the markets and make the most money while mitigating the risk and doing it in a way where I can grow quick, right? Because $22,000 account, I'm looking to eventually make a full-time living off selling options. To do it with 22,000 is going to be tough without taking serious risk and taking plays like MSTX. Now, if this was a $200,000 account, maybe I would still be doing MSTX, but maybe I'd be doing it only with 20,000, right? So it's like, that's the thing about trading. It's like if you have a large sum, you either need to, one, take less risky plays, or two, take plays that are just as risky but not with the full amount. But if you have a small amount, then you can do things where you're putting the whole account into a riskier play. So I know 20,000 might not be a small amount to everyone, but in the world of selling options, it isn't the biggest amount. because there's really not so many stocks you can sell options on with 20,000, right? So option selling to me is more of a high 5-figure, 6-figure, account size type of game. But again, I'm trying to do the best I can possibly do with this account size to grow the fastest and be sustainable. So worst possible case, I got assigned at 75. I do, this is the type of stock that could rip right back up, and I wouldn't mind it. I'd be prepared to hold it. And who knows, right? In the end of the day, cash secured puts is a great option because it allows you to collect premium while not having to buy for being well below where it currently trades. But in a lot of ways, if you're going to make the most money possible, you want to get assigned because you want to buy and you want to have a great buy and then ride it back up, right? And then after you ride it back up for a bit, take covered calls, right? Because that's the thing. Taking covered calls could be a double-edged sword because you might not want to just rush right into it because, let's just say you get in at 75, right? On the cash secured put, you get assigned at 75 and it's down at 50. Yes, you can collect premium again, but you might want to wait for it to get back up to 75, then make your strike like 90, 95. This way, you're putting yourself in a position where you can't really lose. So there's a lot of ways to maneuver, but I wanted to inform you guys where we're at with the account. Obviously, we still have this Robinhood play, which is up, 60%, but it's pennies right now in terms of the account size. And Robinhood is a stock that I have loved. I've always loved, and honestly, like getting assigned to Robinhood would be the least of my concerns. I don't mind holding Robinhood for the rest of my life, truthfully. So I hope you guys enjoyed that video, understanding where I'm at with this account size. Shout out to the guy who even opened my eyes to, stuff like MSTX. It's extremely risky, but if you're going to grow a small account fast, this is the type of stuff you have to do as an option seller. So I hope you guys enjoyed this video. I hope you learned a lot. Make sure to like, comment, and subscribe for more content, and I'll make sure to keep it coming. Enjoy your Thanksgiving, enjoy your holidays, and we'll be back Friday for another video.